Alright, a new week, day 61. Did manage to get some more out of the trading stop loss in the Euro Great British Pound. CAD Swissy hasn't moved much, but the worst one, the US dollar, this is lurching towards that stop loss. Came within about 2 pips earlier. Doesn't bode well, but as long as we're still in it, we still got a chance. Cool. Day number 62. This strategy is now at death's door. The Euro Pound's going okay, but the US dollar Swiss franc, that has been defeated. $400 gone from the trades. Did gain about 10% of that back from $20 on each of the sub trades for the swaps, but overall really poor. Couldn't afford to be let down by a double risk, and there's really not much left for it now. Just got to see these last trades through. Hopefully we do get the big win on Euro Pound at least. Would be nice to finish with a silver lining, but we do know this strategy has performed very poorly, really letting us down and letting itself down as well. Alright, day number 64, and that is it. Strategy over. Both these trades gone today. Let's look Euro Great British Pound first. Did manage to take the 3 times take profit level. Haven't seen that since the first US dollar Canadian trade right at the beginning of the strategy. So over $300 when you include the swap there on the Euro Pound sub trade B. Very nice, but not enough to keep us going with the strategy because the CAD Swissy has gone just like the US dollar Swissy, except half the risk, I suppose. This is a loss. You can see right at the start of the day, pushed down just enough. There was a big drop later on as well. It's rebounded since, but stop loss is a stop loss. So both sub trade A and sub trade B gone there. Not pretty in the end on this strategy. Even with that win on the Euro Pound, we are basically 10% down for the strategy after almost 13 weeks trading. Not good enough, so we'll call it there. Let's take it over to the journal. Alright, same old story. Started off okay. US dollar CAD gave us some hope, even with a couple losers around it. But the big red patch came, went on and on and on. Look at this. Absolutely awful until we did get this one winner Euro Pound right at the end. Small amount of redemption for the strategy, but let's be honest, not good at all. 12 trades over 64 days, so thereabouts 1 a week and 10% down on the account. It does look a bit nicer than it was at the end because all the swaps that came through, we did actually finish positive on the swaps. Not too surprising going for the reversal trades, but not enough to salvage the deep losses that have occurred. It was just irredeemable after this giant red C here. So let's just give our final thoughts to wrap up the strategy. Alright, just as we saw, this one was not good, not even a bit. With going around 10% down in 13 weeks of trades, that is pretty close to losing 1% of the account every single week. 2.5 years of trading the strategy like this, and that is all of the money gone. Don't want that. Often we would be looking at ways of tweaking the strategy. It's a common piece of generic advice to give. On this one though, it's not even really worth a tweak or 6 tweaks. This one went bad enough that it's possible we consider it for a reverse strategy, reversing the reversal where we trade the exact opposite of the intended signals of the indicator to try and get a positive outcome. It's kind of crazy that it can work out like that, where some indicators, for example, are sworn as trend indicators, but actually better at picking out reversals, and some reversal indicators like divergence on the accumulation distribution could well be a better sign of trend continuation than reversal divergence. Yikes for the indicator. Something else to consider with this strategy is that yes, it's all very easy psychologically when it's just demo money, but if you take as many losers like this, that is a mind churn to go through if it's your real actual money. Even if the strategy is meant to end up okay over time, it is not going to be great trying to stick with it psychologically, trying to have that belief that it will eventually turn around. That is a very difficult task to manage. If you are trying to stay with it, and good luck to you if you are you really going to be able to stick to the exact system and not even worry about it? You need some sort of resolve to take your real money, lose 10 trades in a row and not be psychologically fazed by it. Or you need a mind that doesn't care about money. But if you don't care about your money, it's probably not the best idea to be trading with it. That money will go fast. Either way, I'd say it's a mighty fine idea to avoid the divergence on the accumulation distribution indicator, unless of course you've got something tried and tested, in which case let us know about that please. That's all from us, but there is some more information in the video description. I'm sure that's what everybody is here for, heading there straight away. And one more reminder that this strategy was of course traded with demo money. It's not always the best idea to take the most basic signals from a standard indicator and just dive straight in with $1 million. That is a recipe for losing money on strategies just like this one, so probably don't do that. Thank you for watching. This is Project Trade. I am the Amazon's tributaries, and we will be back.